Hi, this is Alkemy with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 17th of December. Starting off with the FTSE 100, which did what we didn't want it to do, which was break that uptrend line there from last month at 82.80. End of day closed below 82.80, which we had yesterday. Meant that there was a chance not only of the 50-day line there at 82.20, but also the 200-day moving average at 81.70. Hoping that we don't have to go the full stretch and head down to the floor of that one-year rising trend channel at 80.80, as that would basically be a rather disappointing end to the year, and also suggests that we're just rolling over after an extended top near and just above 8,400. In order to break the negative pattern, we've got to get the RSI back above neutral 50 versus 43 at the moment, and also close at least above the 50-day moving average, 82.30. The big break to the upside would happen if we broke that December resistance line there at 83.10, but at the moment that seems and feels like it's a long way away. Moving on to the DAX, and here the picture is that the market is actually behaving as if it's just ready to keep on trucking. The floor of the bull flag there, the recent one, around 20,200, and we've tested that as support today. And looking for a breakthrough 20,500 to take us to the top of the rising trend channel from this time last year as high as 20,800 by the end of this month. Worst case is we have a rug pull down to the floor of the gap there from earlier this month, just above 20,000. Moving on to the Dow, and here we have had consecutive and almost rather worrying down days now, consecutive streak of down days. Over the last week and more. We are seeing the 50-day moving average there at 43,400 fast approaching, and the floor of the channel at 43,000, the channel there from back in August. And I suppose it would be difficult now for this market to avoid heading down to that area. But at least while we're above that, we're in a rising trend channel and have the chance of 45,000 maybe early in the new year. Moving on to Bitcoin, which has been the ray of light amongst the leading markets and continues to be so. We managed to break through the April resistance line target there. That's currently around 103,000. Above that, we're looking for 120,000, and have been looking for that since, and looking for that for the end of January, and we've been looking for that for a couple of weeks now. So hopefully we will get it. Ideally, we stay above that 103,000 area, as that was the initial December record and also is that April resistance line, but heading for that March resistance line projection hopefully by the end of January. Moving on to gold, which has been sort of down in the dumps of late, but still trying to find support, and doing it so far above the recent post-November support there, 2630, and above the floor of that rising trend channel from February at basically the same level. Be a nice confidence booster if you've got an end of day close through the 50-day moving average rising there just shy of 2,700. That would help the picture, but at the moment just consolidating hopefully before a new leg to the upside. Moving on to the stocks, and starting off with Alchemy, where I suppose it's still no news is good news. This interesting W-shaped pattern here, but the main point is that we're above the November resistance there at £1.30. Above that, we're looking for up to £2, perhaps by the end of next month. And obviously the implication there is that the company will come up with some significant news to help the cause. On to Asiamet, which had a decent flurry last week. It looks like it's going to try another one this week as well. Key reversal to the upside so far today, just nudging that 200-day line at 0.82. We're looking at the top of the triangle there at a penny, hopefully by the end of this month. And we're helped along by the way that we've got both the 50 and 200-day lines rising at the moment. That suggests we're in the run-up to a golden cross, and that tends to be the strongest part of the cycle. So hopefully the kind of move that we had in April, May could materialize in December, January. On to stock which is very unfairly treated, I think, by the market, given its degree of operational and fundamental success. Here we've got Arrow Exploration, and here we've broken this falling wedge, which has been in place since July. The level there around 22 pence, and above that, looking for at least the 200-day moving average at 25 pence by the end of this month, and hopefully much more. You can see that basically the shares bounced off the main support area towards and just below 20 pence earlier this month. Moving on to a stock which doesn't normally get an airing here, but it's Christmas, etc., etc. And fans of Passa Fashion seem to have been bidding up the stock here since October. The main break there around the £7.20 level. The best thing about the shares now, though, is that it looks as though we're in a rising trend channel. That's been in place, or can be drawn from July. Top of the channel there as high as £14, which I suppose would be a February target. But the key here is that we're backed by a rebound above the 50-day moving average and an unfilled gap to the upside from the middle of last month. That suggests that this is indeed a decent recovery play, at least while we're above the floor of the channel there at £9.30. Had a request for the following stock, which is Cobra Resources, and here, although obviously not the most liquid stock in town, you can see that we are going for a rising trend channel base. We've got a rising 200-day line, which is a help, and the shares have gapped up today after gapping down at the end of last month. So that means in theory we've got a bear trap island reversal, one of the stronger signals, and should therefore be able to hit £0.015 maybe by the end of next month. Big picture target for fans of the shares is up to 2 pence plus the upper parallel of that rising trend channel base. Maybe we can have that for February, something like that. Only back below a penny now really endangers the recovery scenario there. Another stock which has come back from the cold is Eco Atlantic. Here we had an unfilled gap to the upside above the 50-day line, now rising. We had that just last week, and we've also got, if you look closely, the 50-day line rising, and I think the 200-day line rising as well. So that could suggest we're in the run-up to a golden cross, and therefore we may be able to hit the top of that broadening triangle from June, which I drew some time ago at 15.5 pence. By the end of next month. Ideally, we stay above the 50-day line and that gap near 10.25 pence. Ferro-Alloy is a company which I've been charting from the lows, and here we've managed to hit our second target. In fact, we've managed to exceed our second target and gapping through it as well, which is the more positive. Already highlighted the unfilled gap to the unfilled gap to the upside off the low, but also the 200-day moving average, the 50 and 200-day moving average is both rising at the moment. The golden cross. That suggests we should easily hit the third target there at just over 14 pence by the end of this month, especially while we're above the old November peak at 9 pence. On to Ondine, which had some decent news today, and here you can see that even though we're trading relatively flat so far this month, we've stayed above the 200-day line there at 7.5 pence, and looking for the top of that rising trend channel base, the red line there at 9.5 pence. By the end of next month. Ideally, we stay on the right side of 7.5 pence there. I was suggesting a few days ago that Phoenix Copper was a bit overdone on the bearishness, and today, in fact yesterday, the shares have showed that. We've had a bear trap rebound from below the 5 pence level, which was the November support above 5. We're looking for the shares to break out of that channel at 6.8 pence. And perhaps head up to as high as the 200-day line at 14 pence by the end of next month. The minimum here, though, should at least be 8 or 9 pence, as that was November resistance. The other point to note is the way that we've got bullish divergence there, so lower low for December, higher RSI trace, plus yesterday's price action was opening at the low, closing at the high, and so far today we're doing that as well. So that does imply some serious interest in terms of bottom fishing. On to Quadrise, which I've said, well, obviously I think everyone else can work out, that has delivered a major fundamental turnaround. The second target there was up to 3.7 pence, and now while we're above the old November peak there at 4.4 pence, looking for the shares to hit that green line from back in 2018 as high as 6.5 pence by the end of this month. Also a company in the news today is Rome Resources, and here still the same chart pattern, though the shares haven't really moved. We had a little flurry up to the 50-day line, and that really is the level to break. Sharply rising 50-day line, so need an end-of-day close above that to then give us a potential move up to that resistance line target there at 0.41 by the end of this month. Ideally, we stay on the right side of the 0.32, 0.33 zone, which has been recent support and old resistance. On to Sound Energy, which I interviewed a couple of weeks ago, and here still looking for that a proper sustained price action above a penny to give us our target there, the top of the triangle there at 1.07. After that, looking for 1.2 pence, hopefully by the end of next month. Ideally now we stay above that recent support from yesterday at 0.9 pence. Moving on to another stock which has been a slow burn for the whole of 2024, and it's Sovereign Metals. Here you can see the rising trend channel there from back in February, top of the channel there as high as 47 pence. We're looking for that by the end of next month at the current rate of progress, but happy with the stock while it remains above the latest gap at 36 pence and the floor of the channel just below that. A lot of people saying that technology, well, actually one person perhaps saying that technology minerals is a duster, but the rest of us know that the market is rather more complicated than that, and you can see that by today's rise in the shares. We've hit the top of the triangle base there at 0.33 pence, which was our best case scenario target. We can now shoot for as high as 0.7 pence while we're above the 0.33 pence level. And let's see if we can do that. Obviously, we've got the block there of the 200-day line at current levels, but and we haven't been above that since March. But if we can get through this zone up towards 0.4 pence, then 0.7 pence could be on offer. Finishing off with Vast, and here you can see we've got quite a decent U-shaped turnaround here, maybe a bit of also a neckline break there at 0.08. Above 0.08, looking for potentially recent resistance around 0.1 pence, and then the best case would be up to 0.16, I suppose, fundraisers, placings, etc. Permitting. But in the meantime, at least while we're above 0.08, potential recovery here at Vast. That's it for me today. More updates tomorrow.